expectation setter. And like you said too, it's like, okay, there's a lot that's happened. There's a lot going on now. There's a lot around the corner. What are we doing? What are we thinking? And how are we getting prepared for the end of the year? And a nice little update, because it's been a while since we've been on the podcast too for our listeners. So we're back.
We're back.
Welcome back.
You as well.
Yes. So that's going to be the topic of today, is again, just how we're getting prepared and what's been going on in the market and what's going on right now.
Right.
All right. But as always, what do we do?
What do we start out with?
We start with the verse, and I got one for today. I already
Awesome. Fantastic.
Because I've been in this every morning. This is a part of my new morning routine, is I wake up and I always give God my time first. When I wake up, first thing I do is I give God my time. I sit down with God and have a relationship with God and really strengthen that. But I have added something else in where I start with a certain piece of scripture every single morning to get my mind right for the day.
Beautiful.
And that's Ephesians 6. Do you know that off the top of your head? Ephesians 6?
I'm familiar with the chapter. I just don't know right verbatim on my head. I love Ephesians. I love the book of Ephesians.
So I'm not going to read entire Ephesians 6 because it's long, but I'm going to talk about a couple little things that I had circled or highlighted. It's basically talking about putting on the armor of God, that every day you wake up, it's a constant battle with the enemy. The enemy is going to try and do anything in his power to pull you away from God, to put you in a bad state of mind, to get you feeling depressed, to isolate you. Like, it is a constant freaking battle every single day with the enemy. And that's exactly what Ephesians 6 talks about, is every day it's a battle where you need to put on the armor of God. So we go into Ephesians 6, verse 10. Finally, be strengthened by the Lord and his vast strength. Put on the full armor of God so that you can stand against the schemes of the devil. For our struggle is not against flesh and blood, but against the rulers, against the authorities, against the cosmic powers of this darkness, against evil, spiritual forces in the heaven. Verse 13. For this reason, take up the full armor of God so that you may be able to resist in the evil day. You have prepared everything to take your stand. And so it says, stand therefore with truth like a belt around your waist, righteousness like armor on your chest, and your feet sandaled with the readiness for the gospel. In every situation, take up the shield of faith with which you can extinguish all the flaming arrows of the evil one. Take the helmet of salvation and the sword of the Spirit, which is the word of God, the Bible. Pray at all times in the Spirit, and with every prayer and every request, stay alert with all perseverance and intercession for all the saints. And so that's how I start my day, because it is a battle every day. Every day the enemy's coming after us. And I like starting my day like this. It just reminds me that it is a battle and that this is the armor of God. It's like the Bible, the word, the truth, connecting with other people, being in those environments with other like-minded, godly men and women, and just put yourself in those environments. That's your strength. That's your armor. That's your shield. And that's going to be how you fight off the enemy on a daily basis. And that's been amazing for me lately. Start with Ephesians 6.
It's awesome because God is always there. Morning, noon, and night. He doesn't go away.
Omnipresent.
We just need to invite him in. But when we do, change can take place. God is for us. So, but we need to lean on him. We need to lean on his understanding and his strength, because we can't do it in our own flesh.
Absolutely.
So,
and every day we wake up, it's like, what can I do to be a blessing to others? How can I take the blessings God has given me and be a blessing to somebody else? How can I fight off the enemy today? Ephesians 6 is, again, by far one of the best ways I've been starting my mornings for the past couple months.
Amen. And it's your protection.
It is.
That's the thing. We can walk out there, and when we speak the name of Jesus into the atmosphere, change takes place.
Mm-hmm.
And also, and it's interesting because you would take in that Bible verse, I was thinking of, faith. Faith is being sure of what we hope for, certain of what we don't see. We don't always see everything, but we have the faith that something's going to happen and something's going to change. So, in that chapter, it mentions, about faith and having that belief that it can take place and not having doubt. So
100%. Yeah.
Well, I'm going to start us off in prayer.
All right. I love it.
Not that all the verses aren't great, but I love that.
That's up there on the list for me. That's definitely a good, powerful one.
It's a good one.
Sure.
Yeah. So Lord, I just thank you for this day. I thank you for bringing us back together once again. Lord, I just miss these opportunities to have these kind of conversations and share the knowledge and everything that we know and the experiences we've been through, but more importantly, that we put you first. that you're going to guide us through everything, no matter what the circumstances might be. And we just lean on your faith, your trust, and your understanding that we can't do it in our own will. So Lord, I just ask that you got our conversation today. We just ask that you bless every person that's listening to this today. And again, I just thank you for another day. In Jesus' name we pray.
Amen. Amen. All right. So, yeah, man, what's been going on from your perspective in the economy, the stock market, really just a thorough update on what we've had going on these past 1 to 2 months.
Well, it's as confusing as ever. There's a lot of news and information out there, and it's just navigating through that. And I think it goes back to that, to the Bible verses, just, even praying into that. God, how do I navigate through all this? How can I be successful at what I'm doing? How can I do the right thing that will allow you to bless what I'm doing? And it's in your will and not my will. So you look at just the news in the last couple of months, whether it's, let's go back to April with the tariffs. Well, suddenly the
market was down. Oh my gosh. Lot.
S&P and NASDAQ were down 20%. So that's bear market.
Yep.
And that's coming off the high. And then what happened? It bounced right back in the month of May. And suddenly right now we're sitting just shy of all-time highs again.
Right. And we're up officially now 8%. Well, after the last couple of days, not so much, but still 6-7% is our yearly gain so far. And that was after a massive 20-some% drop in 45 days.
Mm-hmm. And that's the thing too, is the things that we talk about in here is, again, taking the emotion out of the equation. And we talked about this in some of our conversations, during the day, that, even with that pullback, it's a buying opportunity. I mean, I look at some of the
we were talking about that back in March. I mean, one of the first podcasts we talked about is the market crashing? Set those expectations. We talked a lot about preparation. Where are we at? What are we looking to do? And that was 45 days prior to the market actually putting in that bottom in April. Yeah.
Well, and that's the thing, is it's like whether you're taking out a trade or whether it's a day trade or even a long term, is having the appropriate plan and understanding what the outcomes may or may not be, and being prepared for those events. Well, what happens if the market goes up by this much? What happens if the market goes down by this much? What are you
going to do? Right.
Do I sell? Probably not, because, why am I going to sell at the bottom? And any number of people came up to me during that time, like, should I sell? And I'm like, no, I'm begging you not to. This is short term, because if you look at the reasons behind it, are not fundamentally driven.
Right.
And that's the key thing to look out for. And the other thing is,
it's just the market doesn't like uncertainty. No. And that was a very uncertain time with tariffs, what's going to happen. And the market got spooked. The market doesn't like uncertainty. And that's why you saw the market just really in free fall mode until we got certainty on what was taking place, what was happening.
Yeah, and that's what you don't want to necessarily trade off of or make decisions off of that. I mean, you can, if you have a plan laid out that if the market does this and I'm going to go short the market or puts on whatever, you already have a strategy in place. But don't get emotional and be like, oh my gosh, it's going to zero. Let me sell everything. Because again, I go back and look at the financial crisis, which was brutal. The Dow, and I use the Dow just because it's the bigger index, bottomed out in March of 2009 at around 7,700. It's over 40,000 today. And that's like 16 years later. That's not a long time.
That's 5X?
Yeah, it's a lot.
More than that. Yeah, it's up there. Yeah.
But look at the gains you would have missed in between. Because here's the thing it comes down to, and I done research on this stuff. If you miss just the 10 best days in the market, what your return does, it gets destroyed. So you don't want to be out of the market, because what happens if I sold that at the end of April at the bottom, this thing bounced back so quick. Where are you buying back in?
And that's halfway. The thing is, a lot of, retail traders, that's like, me and you, retail individuals, is like we make decisions based on emotion. I mean, that's what the majority does. So it's like when the market is down big, they get emotional. Like you always say, emotion trumps logic. They get scared. It's got to go lower. They sell. The market bottoms. It starts going up. They don't trust it yet. But then the euphoria sets back in when we get to all-time highs. So what do? Well, it's got to go up now. So let me get in at these all-time highs. And then it pulls back a little bit like we're seeing now. What happens? They freak out, get emotional, make the decision to pull.
Right. And that's the thing. If you have the understanding and the plan in place that guess what? The market's going to drop 5, 10, 15, 20% at any given time. It will happen. It's a natural process in the overall market. Just like it goes on the upside, 5, 10, 15, 20%. Be prepared for that and know that if the market does drop, I'm not panic selling. It will calm down. I don't know how long it's going to take, but it will calm down.
Mm-hmm.
And it will return. Unless your plan was I was supposed to retire in 5 minutes, then maybe you shouldn't have been.
Then there's a different type of plan that you have. Right.
But that should have been part of your plan. And that's the key thing. People don't plan to fail, they fail to plan. And if I don't have a plan in place, that's when I panic. And then
that's when emotion trumps logic, because you have no clarity on what should I be doing? What's the best decision? And you freak out. You make those emotional decisions and you regret them a month later, 2 months later.
Yeah. And then you have people chirping in your ear. You're on social media, sell, sell, sell. It's going to zero. It's crashing. And they use large words to, make something sound a lot worse than it probably is. And listen, it's not fun when you're going through it. When you look back on it, you're like, oh, that would have been the buying opportunity of a lifetime. And you don't get many of those opportunities that come around all the time.
But that was April. That was an opportunity of a lifetime. I mean, the other opportunity that I was around for was COVID.
Mm-hmm.
And I missed that opportunity because I had no idea what was going on and how low the market was going. And I'm just like, I'm not touching anything. And so I missed a really good opportunity, but this was the second best one since COVID.
Even COVID was tough because it's like, okay, nobody walking this earth ever experienced that. There was no worldwide pandemic that basically shut the world down. Nothing was moving.
How long is it going to be shut down? No one had any idea.
Yeah, that's the key. It's like, okay, could it be, months? Could it be weeks, years? I no idea. And we shook through it and it worked, things worked out as typically does, but you don't know. But again, having a plan will help guide you through those minefields.
So we're talking a lot about plans. Preparation's key. Preparation's everything. Let's maybe run through what we were doing back in March and April to build the plan. Like, what were we looking at? What were we doing? How were we really constructing the plan and being prepared? Because it's one thing to understand, like, yeah, I need to have a plan built. Of course I need to have a plan, but how do I actually structure the plan? What should I be looking at? So let's maybe run through that.
I think what we look at, and we've talked about this, is you always have a basket of stocks. Oh, I wish I bought it. I wish I bought NVIDIA because it's so expensive right now. Or any stocks, even recent times, is I'm going to wait for a pullback, wait for it to get cheaper. And that's what I did. Is all of a sudden I saw the market coming back, and I'm like, okay, I'm going shopping, and I started putting in buys at lower prices. If it hits it, I get filled. Fantastic. If I don't, that's okay, because it just didn't get to my level that I wanted to enter. That was part of my plan. I mean,
you're coming in saying, I want to buy these stocks at these levels for these reasons. Fundamentally, technically, they're on a shopping list. I see 10, 20 years of upside growth, solid companies, and these are the areas that I want to be a buyer.
Yeah.
Because you have clarity on that. Where am I getting in and why?
You look at the tariffs, okay? It's a short-term event. It has nothing to do with why NVIDIA dropped below 100. There's nothing wrong with the company.
Right.
They're still going to be they're still selling their chips. So I put a price in at 87 and I got filled. It got down to 86 and a half, and look where it is today.
And that's awesome. You got filled. That was a part of your plan to buy there. But at any point in time, did you think of, well, what if it goes lower? You think about the negative side of the plan? Like, what if it does drop another 10%? What would you do?
I'm okay with that, because I still got in at a great price. I'm not trying to time the bottom. That's the key too, is no one can time the top and no one can time the bottom. I'd rather be in it at a way cheaper price than when I was looking at it a month before. And the price target I put on it was a good level, because you looked at different supply, demand, all the fundamentals and technical analysis. And I'm like, if I get in there, great. If it doesn't get there, I don't get filled like AMD. I missed it by like 5 points. I'm like, I'm okay. It just didn't get to my entry point, and it wasn't part of my plan.
Right. And I do the same thing. It's like, NVIDIA is a great example of like, we both got in, great entry prices. That's where we wanted to be. But I'm thinking, what if it goes down another 10%? What would I want to do? Well, I definitely wouldn't want to sell. Fundamentally, the company's still strong. I wouldn't want to sell. I'd want to buy more. So at least I know that I don't want to take all the cash I have to allocate to Nvidia and
Right.
dump it all in at $88. Because
Correct.
if it does come down 10 more percent, I don't have any money to add to it to bring my cost basis down, and I won't be able to dollar cost average in. So I'm not putting all my eggs in one basket, and I'm not going to dump all my capital in today just in case it comes down. But what if it doesn't, Josh? I still got some skin in the game, right? I still got a great cost basis with the first position that I took, and it's okay. And like you said, look where it's at now.
Yeah.
I didn't get those additional fills that I wanted, but I'm okay with what I've got.
Yeah. And that's the same thing on the other companies I didn't get in. It's like, okay. And I wasn't going to chase it. I didn't go in like, okay, I forget what the I put AMD down at 77. It just didn't get there. I'm like, okay, I didn't start chasing after it because I don't want to chase after a stock because there goes the profit. And I'm like, you know what? I was happy I got in on some of the different stocks, and that's good. And then I had my exit plan, my scale out plan, like I did on Nvidia. So I took profits at 164, and now I'm holding the rest.
It's kind of like me and Palantir. I had my order at 65. It gets to 67, and we just got to like $190 the other day.
That's one of the other ones I was looking at too. It's like, yeah,
but I was okay with it. Did it sting a little bit? Of course.
Yeah.
Right. But at least I have the discipline. Like, it made me feel better. I felt more strong and in control and confident. And I felt the discipline cultivating because it's like I had the plan and I stuck to the plan. I didn't deviate from it. No. I didn't let my emotions trump my logic. I didn't chase it. I said, you know what? I missed it. It's okay.
Yeah.
Wait for the next one. And there were some really good opportunities that we all got involved with back in April.
Yeah.
Because so you're not going to catch them all. Can't catch 100% of them.
Now you look at the stocks that have run up. Now some are starting to pull back. And it's like, okay, let's reevaluate. Are there some other opportunities potentially out there if a stock gets to another lower price level that I want to enter?
Exactly.
And that's the key. And then if you really look at it is, okay, maybe you don't have a shopping list. Let's say I don't have that much capital to deploy. Dollar cost averaging.
Even $1.
Think about, let's just take the first 8 months of the year. If I was buying in every month on the 15th of the month, I'm buying in January, well, higher than February. I'm buying in February, higher than January, but at least at a good price. Then I get to March. I'm still buying. I get into April. Oh, now I'm getting in cheaper because now the market's starting to fall. And I'm getting a little bit cheaper maybe in May. So my average cost has gone down. And I'm doing it automatically into a good investment. Maybe it's an ETF. Maybe it's a mutual fund. Maybe it's an individual stock or a basket of stocks. I'm going to deploy $50, every month. I have 5 companies, $250 to deploy, and I'm doing it without even thinking about it. Great companies.
One day out of the month, you come in and you allocate, regardless of where the price is. You just come in and deploy it strategically.
Yeah. And maybe you have cash on the side that all of a sudden you do get a dramatic pullback. I can really deploy at a cheap level.
Exactly.
That's part of your plan. Again, have that plan in place. But again, it's the auto investment is so much easier because it takes the emotion off the table immediately because regardless of where the price is, I'm buying it. But you want to reevaluate because you want to make sure you're still buying a good company. I mean, if all of a sudden the company's really struggling and their earnings are way off and all of a sudden it's like, they're in trouble, then you may want to reevaluate that particular stock.
And just add an addendum to your plan.
Yeah.
Reevaluate, revise that plan. If you see things are shifting fundamentally, well, your plan's probably going to change.
Yeah. Well, that's like when I was in sales. We had to come up with a business plan every single year. But my business plan could change throughout the year because things change in the marketplace. So I always looked at the business plan, and your investment plan should be a living, breathing thing. Mm-hmm. That it's not stagnant. Things are going to change. Things may change in your life that like all of a sudden, I got to pare back the money I'm putting into the market. I need to allocate it somewhere else, maybe kids' college or a house or whatever it might be.
Or maybe you can allocate more.
Or whatever more. The case is. Yeah, the other side of it. But it's a plan that can be massaged and changed, but it's at least a plan. Because things are going to impact. I don't care what the plan is. Whatever your plan is, it can impact, and you have to make adjustments.
And then, hey, have a plan for your plan.
Yeah. But then
why not?
It takes the emotion out of it because you already understand that, you know what? There's always going to be change. That's the only thing in life is change. It's inevitable. So change is always going to be there, but it's how you react to it.
Exactly. And again, the plan removes the emotion. You're logical. You know exactly what you're going to do, when you're going to do it. You have full visibility, full clarity. And you're looking at all aspects, right? You're looking at worst case scenarios. Like, what would you do? Having the plan for the plan. Best case scenarios, we get back up to all-time highs. What do I do? Do I sell? Do I trim? Do I add more? Like, what do I do? Have a plan for that. Like we did. Like we had an idea of what we were going to do with some of these long-term investments if we were able to recover, and we did. So have a plan for that too.
So what's your plan for this recession we're going into?
Oh my goodness, I am freaking out, man. Freaking out. I am pulling all my money from the stock market, and I am full porting to the short side because I'm freaking out. Making some emotional decisions. No.
I took everything out. It's under my mattress.
Right. No, I mean, honestly, the past, year and a half, 2 years, there was looming recession fears. Recession, soft landing, hard landing. What's the Fed going to do? Are they behind? This and that. And then the talking heads on CNBC start talking about recession. And we're over here like, the data doesn't support it. No. We just don't see anything within the data that supports or suggests we have a recession right around the corner. We started to get some signs potentially, and that was Q2 GDP. But let's talk about that and why we weren't really too concerned.
We'll even jump back. Let's go back 2.5 years ago, because there was a sign that maybe it's happening. But you need to have other confluences to really see that there will be, is the inverted yield curve.
Which it was. For 2.5 years, it was inverted.
Yeah, it was inverted, and we just maybe 7 months ago got back to normal rates.
Right.
And so for those that don't know the inverted yield curve, you have your 30-year treasury, 20-year treasury, 10-year, 5-year, 2-year, and then all the way down to months. Mm-hmm. Is when your short-term rates, like your 2-year, yields higher than your 5-year and your 10-year. That's an inverted yield curve. And that typically signals a recession. It just didn't this time because you had full employment all along. And you have to have employment's a big key to the inflation. You're not going to do a recession. You're not going to be going into a recession when you're at full employment.
And we've been pretty much at full employment for the past 2.5 years.
4.2 the last read. 5% is still
the historical average. Yeah,
is a full. Well, 5% is still deemed full employment. So we are at full employment.
So we look at jobs and we're like, well, we're at full employment. So that's not giving us a signal of recession, but yet the yield curve is inverted. Okay, so that's one thing. Mm-hmm. And then we're going to go look at what? We need 2 negative consecutive quarters of GDP.
Right.
Did we have that?
No.
We had one. I don't think we had 1 quarter.
You brought it up. It was the first quarter this year.
Right.
It went negative because of the tariffs. And what happened there, we were running at about a 2.4% GDP rate, positive. And what happened was announced the tariffs. What did companies in this country do? They went out and front-loaded goods. Yep. So they don't have to pay the tariff. This way they're getting it at a cheaper level than maybe tomorrow, depending on what the result of the tariffs were.
So they're spending more money, front-loading goods to try and offset potential tariffs.
Yeah, and that flipped the GDP number from plus 2.4 to negative 0.3. So,
but at that time, it's like, okay, that's a signal, right? That's a negative GDP, but it really wasn't because that was the first estimate, and there was a total of 3. You get 2 estimates, and then the final revision. The final
still was negative. So we did have a negative.
I thought it popped back to positive. Okay.
Yeah. No, we had a negative Q1, so it was negative 0.3 or 0.5. It was negative regardless, anywhere from 0.3 to 0.5. I don't remember the exact number.
Okay.
So now you got 2, but I also had said when that took place, even after the final read, I said that's an anomaly. Because you're going to see a leveling out because companies aren't going to be buying goods the way they were to front run tariffs. Well, the first read we saw for Q2 was positive 2.4.
There you go.
So if we continue at that pace, which we most likely will, we're not going to have a revision that's going to take us to under 0.
No.
So the likelihood
you're not going to see that big of a revision. Maybe a couple percentage point, not even a couple percentage, maybe a couple tenths.
You're not, because you're still getting, the consumer is still intact. They're still spending money. I mean, there's things out there
that a little bit, but they're still
slowing.
Spending. Yeah.
But it goes back to, the economy. You look at is, it's like we want a Goldilocks economy. Not too hot, not too cool. And that's what the Fed tries to do. They balance trying to get the economy in that perfect sweet spot. It's a challenge. It's not easy. We had 8-9% inflation, coming out of COVID
Yeah.
because of all this spending, and the interest rates basically at zero. Well, they had to raise rates to cool that down because it was out of control. Now we're on the flip side where, you're starting to see, jobs are still intact. I mean,
They're still intact. They're good. Spending's slowing a little bit.
A little bit.
Consumer sentiment's down a little bit too. Not crazy, but a little bit.
You're not seeing mass layoffs. You're not seeing. I mean, companies will. There's seasonalities to companies where they lay people off and then they hire. But overall, you're just not getting the jobless claims aren't there. I mean, the numbers up there, it's been pretty consistent
down a little
for a
bit.
long time. Yeah, a
Last
little
Thursday
bit.
too. Yeah.
And you're always going to have that. You're always going to have people that get laid off. You're always going to have people that are, submitting first-time jobless claims and however long they're on the, unemployment. But that's just natural. It's just a matter of keeping them under a particular level so the economy is going to still continue to grow. And that's where interest rates come in, and the Fed funds rate, when they raise or cut rates to help either slow the economy or speed it up.
Mm-hmm. And that's what we're going to see, moving September, as we do plan on the Fed cutting rates, maybe 2 times by the end of the year. And that's just that to help try and, ramp up the economy, get more consumer spending. It's easier to take out loans, rates are cheaper. It encourages people to go borrow and go spend more. That's how you get to ramp the economy up a little bit.
Well, it's a balancing act on the other side, because when you put restrictive, and when you raise rates, you're trying to restrict spending, because who's going to want to borrow at higher costs?
Not a lot.
Well, you still look at where we are right now with the Fed funds rate and where the 10-year Treasury is and the longer term rates. It's about a 200 basis point spread. That's
you can see the Fed's a little behind right now.
Yeah, they need to start cutting, but they're in a tricky spot, because you typically don't really see cutting rates with the economy where it is. But at the same time, you've got to start bringing down some of those spreads and becoming more normalized, or as normal is going to be, to keep the economy moving. Because right now, the biggest component to the economy is the housing market.
Mm-hmm. Yeah.
I mean, housing's starting to move, but not to the point that it really needs to be.
No, I saw something this morning where it was like mortgage rates are down a little bit, but nothing like aggressive.
No, I mean, we're not going to see pre-COVID or during COVID levels.
No,
we're not going to see that, because that was just easy money.
Right.
Can't keep having money that easy. That was that way for 10 years. So now we're getting more normalized. We just need to start bringing down the Fed fund rate to equal what the long-term rates are, to get a better spread.
Exactly.
It's that balancing act for the Fed to keep the economy going just hot enough, but not too hot, and then cool it down, but not freeze it.
Right. And like you said, they have to do something. They have to come in and start to cut, but it's like, well, what if they come in and cut aggressively? What could that do to the market? Is that something that would spook the market?
Yeah.
Right. We're thinking ahead. What could happen in September? What are the plausible outcomes? And how would we get prepared for that ahead of time, after the fact, depending on what happens? Be prepared. So that's something we were talking about today. It's like, we know the Fed's going to start cutting rates. They have to tighten the spreads up, like you've said. So how are we getting prepared for that? That's looming in about, what, a 30-day window?
It's September 17th.
Yeah. So less than 30 days.
The next FOMC meeting, you have the Tuesday, Wednesday. Wednesday's the 17th. That's when you have the interest rate decision. And then Uncle Powell gets up and does his usual powwow.
His dance.
And again, he's got it this week, though. This week's a big one.
Yeah, he's speaking at Jackson Hole Symposium.
That's it.
Yeah, Friday at 10.
3-day get-together of the finance gurus, and he's got his speech on Friday.
And they will pick it apart.
Well, they got to pick it apart early, whether he's hawkish or dovish or what's he saying.
Yeah,
Woo.
Exactly. But we got to think about these things.
Yeah.
Right. Especially as, traders, that's going to impact, market volatility potentially. That may need to have us adapting and pivoting a little bit to adapt to the market. So we're thinking ahead of what could happen. And then definitely from an investment standpoint, we really want to think ahead and have a plan. Because the way I look at it is, okay, the market's priced in probabilities up 25 basis points, right?
Correct.
That's what the market's priced in. And you know what? Okay, cool. But if it comes in more than that, that's very uncertain. And the market, again, does not like uncertainty. And it is something that could happen. They could come out and cut 50 basis points. And I think that's something that would shake the market due to that uncertainty of what does the Fed know that we don't know?
Yeah, that would rattle the market.
Hmm.
That's not even a shake. That's a rattle, because
And
that's
that's
just
something that could happen.
yeah. Because listen, I always believe anything can happen. It's having that, and I'm not Chicken Little saying the sky is falling, but it's
Right.
also it's playing the what ifs, the reasonable what ifs. Is 50 basis points reasonable? Not likely. Could it happen? Maybe.
If there's even for
25.
me, even the slightest percentage chance of something happening, I want to get prepared for it just
So
to be safe. Because you never know, like you said.
you do never know. But I don't know as if I'm going to position going into September with that in mind, that what if it's 50 basis points? It's being cautious, because I think there's opportunity, even if you're not in a trade the day of the announcement, you're going to have opportunities following, because if they cut rates, there's going to be follow through probably to the end of the year with taking advantage of that move.
Exactly. So someone like me, it's like, okay, well, what if the market gets rattled and we see a nice drop? I would want to buy more.
Buy.
Buy. So, okay, right now, if that were to happen today, do I have the cash to buy? No,
Right.
I am heavy. I am loaded up across the board as of April. I am not really sitting in the typical 20% cash that I typically sit in. So, what am I going to need to strategically do? Maybe scale out of some of my long-term holds to where I can free up some of that cash to where if we do, worst case scenario, see a nice decline, I have the cash on the sidelines ready to deploy just in case. And I'm
Right.
thinking ahead.
Oh, absolutely. Yeah. And again, it's having that plan, that the what if.
And
So-
again, and what if it doesn't drop? Like, okay, well, I still got some cash on the sidelines for the next really nice buying opportunity.
Right.
So it's like, I can't lose. Yeah, I'm going to reduce my position on some of these, but there's a lot of these that are like overextended. They're really high. They're due to pull back a little bit. So it's like, okay, at least I would even trim at these areas, free up some cash. And hey, I'm ready to go for, next month. See what happens.
You look at it as like, again, it's always trying to forward look and see what the impacts might be. So the Fed comes in and cuts interest rates 25 basis points. Okay, is it priced into the market? Yeah, kind of, sort of. If we do get the seasonal pullback, August going into September, like we traditionally see. Now, last year, I remember it lasted about 3 days and it was done.
That was it. We were like, seasonality, September, not going to be a great month. And it was a good month.
I was like, what? Really? It was a big pullback in those 3 days. And then all of a sudden it was just right back up. And
Straight
it's
up
like,
from there, we're like, okay, no seasonality this year.
well, we may see the pullback August into the beginning of September, and the FOMC with the Fed interest rate announcement could now push the market into the end of the year.
And that be the catalyst that gets us on the S&P 500 to maybe 7K.
I'm thinking 7,000.
7,000 too?
Yeah. If things line up, if we do see the Fed being less restrictive, I see 7,000.
And that would be a full almost 20% yearly return on the S&P 500 if we close up around 7K.
Mm-hmm.
That's a big year.
It's realistic. I mean, it's realistic. It's not absurd.
No, not at all. Absolutely
Now,
not. And there's a lot of good analysts out there with like JP Morgan, Goldman Sachs that are calling 7K too. And they're really good analysts, usually spot on.
And they're also taking into account everything we just talked about, and then some.
And then some. I mean, shoot, just look at the lows. The lows in April. It's up 30% off the lows.
Yeah.
So,
and you look at the end of the year, typically you get shifts in portfolios and people, repositioning and buying in to take advantage of what's coming up next year.
Yeah, you get usually that little Santa Claus rally towards the end.
Yeah, and who knows what next year is going to bring. I mean, but here's the thing too. Let's go into what the markets have been doing. What's been really supporting the markets is earnings. The
earnings
have been good. Everyone thought it was going to fall off the cliff. Tariffs are going to destroy the economy. It's going to destroy the country, and it's going to hurt earnings. It's going to destroy that. And guess what? It hasn't come to fruition. Now, there are certain areas, yes, there's been impact, especially to the auto business, because you had parts that are getting hit with tariffs, and then the overall sales are getting hit. So, not saying that areas aren't impacted, but overall, the big picture, it hasn't been the hit that all the naysayers and the Chicken Littles out there were saying.
We're talking about 3 months ago, 4 months ago.
Exactly.
Right.
No. And it's also, and that's the key thing too, is sometimes take a step back and analyze for yourself the right information and looking at all the data, and does it line up and does it make logical sense? Because I could go out there, the market's going to crash. The market's going to do this. It's going to do that. Well, what's going to propel that? Are there rational reasons that the market's going to drop or the market's going to rise? And the if-then statement, if this happens, then this could happen. Putting all that together and making an intelligent plan to implement when the time comes and the things that you're looking for line up appropriately.
Exactly. Because I don't know about you, but I just don't put a lot of weight and trust in the talking heads on CNBC.
I put more into some of them as opposed to what I hear from the mainstream media.
Yeah.
Because here's what I look at is you look at what listen, their job is on the line when it comes to the things that they're saying, because what they're saying is what they typically implement into their portfolios and the way they position. They're not all right. Listen, you put 50 different people in a room, you're going to get 50 different opinions. Yeah. But you look at the overall, and again, I listen to that stuff all day long and I analyze what they're saying. And it's like, okay, based on my knowledge in the market for 30 years, my exposure and experience to economists, money managers, the whole thing is like, what makes the most logical sense? What's happened historically and what could potentially happen going forward in, 1 month, 3 months, 6 months, 12 months, whatever the case might be. And just
keeping a pulse on it.
Right. Because it's also looking at it as like, okay, are they trying to sell something? Are they trying to position their portfolio? Because listen, I've heard some wacky stuff in the last number of weeks about, and I'm like, well, that's probably not going to happen. It just doesn't make any logical sense. I mean, could it? Yeah, because sure, anything could happen. I mean, if I say something often enough, eventually it's going to happen.
Right. So, yeah, I mean, even a clock is twice. Right. 2 times a day.
Exactly.
Yeah.
So again, it's just taking the information, doing your own homework, and that goes for everything. Do your own research and be like, okay, does this make sense? And are just people out there talking for the sake of talking, and they're not right.
Yeah. I mean, just follow it up with, again, your own research, your own due diligence, no matter how trustworthy the person is. Just, get into a habit of following up. Do your own due diligence and research. Because at the end of the day, there's only 2 people I really trust, God and myself.
Well,
but God first. So it's like, hey,
right, exactly.
You got some integrity, but I still want to just follow up with it. I just want to do my due diligence and fact check it, make sure that I get the information that I need to be able to make that decision, even if it's the same decision that you're making, whatever the case is.
I mean, I hear stock recommendations all day long. And I take a look at some of them. I'm like, yeah, I don't like that. Here's the different reasons. And then I say, I'm like, you know what? That makes some sense in here. Here's why. And I take what their analysis was. I start doing some research and other analysis, and then I start breaking it down further. I'm like, you know what? This makes some sense. This might be worthwhile a trade, whether it's a day trade or a swing trade, whatever the case might be.
Whatever it is. Yeah.
Because listen, at the end of the day, I can't research, and I've had this conversation with my wife, because there's days like, you know what? I didn't take a trade today. Why not? You always say there's a place to make money. I said, you're 100% right, but I can't research 500, 1,000, 1,500 stocks. I just can't.
Right.
If I had a portfolio team, then yeah, we could break it down, dissect it, and then come up with, whatever number of stocks. I look at my window of stocks that I typically look at and see what might be there. And then I add some things and I take some stuff out and what makes the most sense. And then look at different setups. And they're like, okay, you know what? This one's not right now, but I think it might be something in 2 to 3 weeks.
Because if I just made my decisions as an investor based on what other people recommended or advised, I would lose a lot of money.
Yeah.
And I would miss a lot of good opportunities too. I mean, it takes me back where I've done that before, where I bought a long-term investment. I bought a lot of shares of a company because this guy was talking about it. He did his due diligence. He was bought in. He put his whole portfolio into it. I'm like, well, he's bought in. He knows what he's doing. I trust the guy. Let me follow in. I lost like 80% of that investment. 80% just by trusting someone and not doing my own due diligence. Thereafter, I went through and saw that they were burning cash like crazy. And he was just hoping for a turnaround. And I was like, man, if I would have saw that, I would have probably eased up on the gas pedal a little bit and not have bought. And then same thing with doing my own due diligence. A lot of people talking negatively about Celsius company, CELH. I'm like, okay, well, I mean, let me go do some research. And I see fundamentally they're strong. there was just a lot of controversy. Their stock was getting beaten down, but fundamentally they were growing, they were strong. And I'm like, this looks to be a good buy. So I got in. And then what do you know? Boop. Nice little move. So again, it just stresses. Like, do your own due diligence, do your own research, take your time.
Yeah. I mean, and the other thing too sometimes happens, and let's look at what was the darling stock during COVID. What was the one they were hyping up there? Why can't I think of it?
Peloton, GameStop. Zoom was hyped up.
GameStop.
Oh, the memes. Yeah, GameStop. Yeah.
And I sat there and looked. I mean, did I look at it? Yes. But then I sat there and looked at it. I'm like, wow, by the time I found out about it, it was like 50 points higher. And I'm like, I'm not chasing after it. No. Like, it doesn't make any sense. Then I started looking at the fundamentals of the company. I'm like, this company sucks.
They're shot. Yeah, they're on the verge of bankruptcy, man.
It's a pump and dump. It's just a matter of how high is this thing going to get pumped.
And I'm like, how many offerings are they going to issue? You know?
Well, they're not dumb. They did the right thing as a company. Of course, you're going to do another offering at a higher price.
Exactly. Yeah. Smart company move. Not great for the investor, but smart for the company.
Yeah. Who's going to get caught in the rug pull? And I'm like, well, that's not going to be me because, yeah, okay, if I bought it at 25, yeah, it would have been great. Well, at 50, yeah, 100, I don't know anymore.
I don't know anymore.
Higher, but I don't know when the rug pull is going to happen because it will happen. And when it does, it's going to be ugly.
Violent. And it was.
It was.
It was terrible. I've had a lot of conversations with a lot of people that lost pretty much everything because of that.
Yeah. And it's, again, it's following what everybody else is doing.
And not thinking critically for your own emotions, trumping the logic, and just not taking a couple minutes to put a plan of action together. That could have all been resolved if you just did a few things.
I mean, it's something I learned. I think Warren Buffett or somebody else, might have been Peter Lynch, I'm not sure. He's like, if everybody's doing it, do the opposite.
Do the complete opposite. Once your taxi driver or your Uber driver starts talking about stocks, or your grandma calls you saying, hey, should I buy this Bitcoin? It's like, no, grandma, I'm shorting it.
That reminds me of the .com era.
Yeah.
Bubble. Oh my gosh. When you're sitting in your barber's chair and they're telling you what they're buying and giving me their portfolio, I'm like, there's the exit.
Troubled times. I mean, I remember that with crypto back in 2021, where it's like everybody is talking about it. My mom's asking about it. Should I buy it? I'm like, please don't touch it. It's coming down. I think 2 months later, it dropped big time.
Oh, it did.
Back down to like 12K.
Went into its bear market.
Yeah.
And everything will cycle. Everything will boom and bust.
And whenever people are freaking out, like, oh, that crypto thing, it's a scam. Oh my goodness. It's like, that's a really good opportunity to probably think about buying.
Yeah. Well, look at the people that were saying it's a scam. Now they're embracing it and they're investing it themselves. And I'm talking about the institutions. I'm not even talking
the institutions, the governments. Yeah.
Again, it's taking a step back and doing research. Is all of it going to be successful? No. It might for a short period of time, but you start getting, it's no different than the .com era. Everybody who was touching .com, they turn around, they were doing an IPO. Mm-hmm. It ran up and then it tanked. It ran up and then it tanked. And you look back at how many of those companies are still around? Not a lot.
You saw the same thing with AI. It's like IPOs and SPACs left and right, AI this, AI that. I mean, that was just 2 short years ago? Mm-hmm. 80% of those companies are dead.
Yeah, because they didn't have the base to be successful. I mean, yeah, they have the IPO.
It was the right time for them to get in because of the hype, knowing, hey, we can benefit as a company, even if we don't really have something here.
Well, look at the recent IPOs, because the IPO market has been dead for a number of years.
Year, I mean, we haven't had a lot.
We've had a bunch recently that have skyrocketed the first or second day, and now they're coming back down to earth. And now they're going to start trading more normal, where they should be trading, more on fundamentals. You look at some of these companies that just came public, they haven't even had an earnings report yet. Because again, as a private, you don't have to disclose that. Now they have to disclose it. It'll be interesting to see where the fundamentals, really the rubber meets the road with the fundamentals and the stock price.
And that's how your big banks, institutions, hedge funds decide. One of the reasons to enter and exit, stock is based on the company's fundamentals and what their forward look is for the company.
Are they actually making money? And that was the thing with the .com back then. A lot of these weren't making any money.
So it's like, yeah, we know all of that's retail movement. A lot of that fluctuation. And it's like, we're not going to really see accumulation and see structure and see until we actually see the big players start to step in. And again, we need to see some earnings come out.
And that's good. And I tell people, you look at the IPOs. if you're not part of the initial IPO, and I mean the pre,
like before it's even IPO'd on the market. Yeah.
If you even if you can get a taste of that from your brokerage firm, and you have to be somewhat higher up, big client to be able to touch those IPOs, you might be able to get 5-10 shares, maybe,
and do decent. Right.
Yeah. And the thing is let the hype come out, and then it'll come back down to earth.
Let it settle.
Evaluate and see what price level. I mean, look at the company that just came out, Bullish, BLSH.
BLSH. That's Bullish. I was thinking something else.
Bullish. Look at the run on that after the IPO, which was like a week and a half ago, maybe.
Yeah, I mean, we opened IPO at 90. We run all the way up to $118 a share, and now we're at 60.
Yeah. Now, if you got the IPO, I think the IPO price was like, I think it priced at like $33.
Yeah, and so you get an open in the 90s, you're up 3x.
Right. But you can't sell those because typically there's a lockup period for the IPO. And then and that's the other thing too, is find out when the unlock period takes place, because you're going to get insiders that are going to sell it
during that time. Exactly.
Who got a piece of the action. So again, those are the things.
I know there's a lot of variables. We talk about a lot of things.
Yeah.
But I think it just comes down to like taking note of the things that we've discussed, because you have an idea of like what we look at, some data and fundamentals, and just kind of take note of it. And as you go out there to do this on your own and put these plans together, just kind of follow through some of those steps. And the more you do it, the better you become, the more you understand it, the more clarity you have. It's just starting to do it, taking the first action.
Yeah. And just look at why did something happen and what was the result of it before you do anything else, just to see what the reaction is to different things, different events. And again, the more knowledge, the better you're going to be, and the more sound you're going to be, and be able to make the appropriate decision. It doesn't mean you're always going to make the right decision. I mean, things, you have a plan in place, doesn't mean it's going to execute the way you want it to, but at least you can turn around and be like, I have my entry plan and my exit plan. My entry was here. I love the level I'm getting in at. Let's say it doesn't play out. I exit, I take a paper cut instead of a massive loss.
It just comes down to two things. It's good risk management skills, having the plan and following through with the plan, not deviating, good risk management skills, and just making sure you're making decisions based on odds and probabilities. That's really what it comes down to. If you make good, high probability decisions and you're really good at managing your risk, you can make that decision wrong half the time. And still do really good without overcomplicating it.
Yeah, because you could have the best of the best trade setup, A++,
long-term investment stock. Yeah.
And then something happens in the market that was totally unexpected. Something like, let's say I think there's going to be a big correction in the market. Everything's lining up that way. And suddenly Russia gets together with Ukraine, and they solve it and they make peace. Israel makes peace with Gaza. And suddenly, what do you think that's going to do to the market? It's going to push it higher. I didn't expect that to happen. I thought it could happen. I didn't think it was going to be today, but guess what? It did.
That's what we call an unforeseen variable.
Yeah. But if that happens, have an exit plan to get out so that you're not taking losses as a result to a news event that nobody expects.
Exactly. Yeah, you're not going to be right 100% of the time. So don't expect it. 90% of the time, 80, 70, don't expect it. Even if you're just good, logical, non-emotional decisions 50% of the time, and you're really good at just following through with those plans that you're building, you're going to do just fine.
Oh, absolutely. Absolutely. Because again, you have the plan in place. I mean, I've had trade structures where I got in, perfect entry. Plays out. I have what's my plan? Well, if it goes down to this point, I'm out. No questions asked, I'm out.
It is what it is.
In the story, it is what it is. It didn't play out the way I expected. Yep. Now it starts, if it goes higher from where I bought in at, I have my exit strategy. Where am I scaling out? How much am I scaling out? What different price targets, if it hits, am I getting out? And then I can execute those. And if all of a sudden I hold a runner and the runner goes to zero, I already made profit. I expected all this, and I was just taking a chance on one contract out of 20 that I bought.
And you're looking at every possible scenario, thinking about what if this happens? What would I do? Every scenario, build the plan, have a plan for the plan, be super prepared, clear. That's going to build your confidence.
Absolutely.
For you to know exactly how to execute. There's no second guessing. There's no extra decision making. You're done. So by the time the emotions even come, you're already, this is my plan and I'm going to follow it.
Exactly. And it's no different. Look at the time of the year. Same thing with a hurricane. Okay, they just announced that in 4 days a hurricane's making landfall wherever.
Where at?
And six hours before, it makes a big shift and it moves away. Well, you had the right plan in place. You were prepared that if it happens, but guess what? You've now protected life and property that if it did come in like they predicted, you were okay with it. Now the plan didn't work out, thankfully, but at least I know that, you know what? I was ready for it. It was in place and it wasn't emotional. I knew what I had to do.
It was like me last year with the 2 hurricanes. First one looks like it's going to be a direct hit. And I'm like, all right, well, I'm going to go, I'm going to get prepared. I'm going to put up the shutters. And then it turns and it misses us. A week later, another hurricane, direct hit. And I'm like, I'm not putting no shutters back up. That was a process. I waited. It's going to shift. 24 hours in, it's coming. Direct hit. And I'm like, well, I got to go put shutters up. Try to put shutters up on a 2-story house when the wind's blowing 30 miles an hour.
Nope.
I should have gotten prepared earlier because I almost, took my life that day. I feel like it was brutal.
You better be strong.
I mean, I almost fell off the ladder a couple times. I definitely dropped some of the panels, man. They went flying. And I mean, you're up there with that panel. These are big panels for these big windows, and you're on a extension ladder, and that wind's kicking. It's like you're fearing for your life.
It's like,
hey, I wish I would have just been prepared a little bit sooner.
That's it. But lesson learned.
Lesson learned. So the hurricane that's out there right now, it's like not even going to hit us. I got my shutters up. No, I don't. I'd be the only person in the neighborhood with shutters up. They'd be like, look at this.
You have a lot of explaining to do.
Right. It's like, what are you doing? You prepared for a hurricane or what? That's funny.
So,
yeah, preparation, that's it. Today. Keeping it simple, too, I think. I think at the end of the day, it's like when we look at things like this, stocks and investing and the federal government and all this stuff, it's a lot. If this is like, it's new. But I will promise the more you kind of like dive into it, the more that you just do some research and study, it'll start to make sense very quick. It won't feel as complex. But my biggest tip for anybody is just keep the entire process simple. When you look at the market, how you pick and choose your stocks, how you build your plan, just keep it as simple as possible. You don't have to overcomplicate it to do really good in the market. Honestly, sometimes the simplest decisions are the best.
Yeah. I mean, and the big thing I do is prayer.
Absolutely.
Having God guide me and direct me where I need to be. But I'll tell you what, it's a big help when it comes to mindset and discipline, the things I need to do, taking a step back and not being emotional about it, because at the end of the day, he's going to guide me. And, obviously I have free will and I can make whatever decision, but he's going to help me make the right decision. So I'm in the best place I possibly can be.
Lean on him, seek wisdom. It's like, be like Solomon. God says, I'll give you anything your heart desires. What do you want? I want wisdom. Out of all the things he could ask for, he asks for wisdom.
You mean he didn't ask for all the gold and silver in the land?
And the wealth and the money of the land? No, wisdom. But guess what? With that wisdom, that followed.
And that was
so when I pray and I ask for something, it's like, God, I just want wisdom. That's it. If I'm more wise and I have wisdom, everything else will fix itself.
100%. God, give me the wisdom of Solomon.
The wisdom of Solomon and the faith of Simon Peter.
The faith of a mustard seed.
The faith of a mustard seed that moves the mountain. But I feel like Paul sometimes, right into the Roman church. I'm like, man, it's like, I don't want to do these things, but my flesh just does them. That confliction. And it's like, I feel like Paul sometimes, where it's like, I know I don't want to do these things, but it's like my flesh it's got the best of me. But at least I know my spirit, the spirit within me, that's what's keeping me strong.
Listen, every day is a battle. It's just a matter of what side you put yourself on. And where
Wake
you put
up
your
with
faith
intention every morning and put the armor of God on. That's the word. That's surrounding yourself with other, like-minded, godly men and women. Just do that. Prioritize that. First 15 minutes of your day, you are ready to crush the day.
That's it. Agreed.
I'm happy to be back. I'm sure our listeners are happy to hear our beautiful voices again.
I hope so.
It's been a while.
We talked about
an interesting couple of months. It has been. Maybe we dive into that on the next episode. Like, what's been going on behind the scenes? Who knows?
Anything's possible. We'll talk about anything.
What's that?
I said, we'll talk about anything.
Anything. So people listening, comments. We love comments. Drop comments. questions you have about today's conversation, we're more than happy to address those in the next topic or the next session. And then if you guys have topics of things that you want us to discuss, things that are relevant for you in your life right now, drop the comments. We review those, we get back to those, and we're more than happy to discuss those topics in future sessions.
Yeah, because the one thing I will promise is if you're thinking about it, so is somebody else.
Exactly.
So the fact that you step up and say something about it, you may be helping somebody else who might be a little more timid to be like, I don't want to put myself out there. You're not putting yourself out there, because if you're saying it, someone else has already been through it. We've probably already been through it, and we can at least have a conversation about it and discuss the different things, and maybe helpful for somebody else as we go through the conversation.
And you showing up and doing that just could be that blessing for somebody else.
Absolutely. 100%.
You want to lead us out in prayer?
I will.
Awesome.
So Lord, I just thank you for bringing us back together and the conversation that we had today to dissect the information and the stuff that's going on out there. But more importantly, Lord, we're bringing you back into this and ourselves back into this. And we just ask that you continue to bless these conversations, bless the people out there. And Lord, I just pray for those individuals that are struggling to dissect the information, or it's causing angst or fear, that they don't have fear, that they put their full faith and trust in you, because that's where it all starts and it ends, is with you, Lord. So Lord, I just ask that you guide people, that people will trust you and follow you. And Lord, I just ask that you continue to bless our time together. And just, Lord, I just ask that you download topics that you want us to talk about here, that make that will help others that we just don't see at the moment. So Lord, I just ask you to bless the rest of our day, the rest of our week. And we just lift this up in Jesus' name. Amen.
But absolutely. Give us the clarity, the wisdom on how can we glorify you through these future episodes. Amen. Each and every time. That's it.
Amen.
Lovely stuff. Well, I can't wait to be back in the next episode next week. Yes. So tune in, ladies and gentlemen. Make sure you subscribe to the Spotify channel so you get notified.